Welcome to my channel, Notes Explained, and here is the explanation of the third part from the chapter Money and Banking for Class 10 Seba Board. Now, let's do a quick revision of what we have done earlier. Firstly, we have learned about the functions of money and the short form was MMSS. The next we have learned about the classification of money, where money was classified into two types, money of account and money proper. And the last we have learned about the 15 different types of money with short tricks. Since we have read a lot about money, now let's see the role of money. Money makes exchange easier. Just because it makes exchange easier, that's why we are using money today and we are not following anymore the barter system. Number two, price system is an important characteristic for which it is largely dependent on the supply of money. So once we buy the things in the market, the price is the most important thing with which we know which things to purchase and which not. Number three, without money, no economic system can operate. Yes, no economic system will be available without money. Money has both advantages and disadvantages. Now let's read the disadvantages or the drawbacks. Number one, it lacks stability of value. So earlier I have told you that it has the stability of value, but now when we observe the things closely, we can observe that they lack stability of value because it leads to inflation and deflation. Now maybe these two words are quite new for you all, so listen the point clearly. Inflation. Let us take for example onion, because recently the cost of onion was very high, reaching 100 or 120 per kg. So price rises due to limited supply of goods. So the supply of onion was very limited, it was very less. That's why the price of the onion was very high. On the other hand, the value of money falls due to less money. Say for example, a person who is very poor, he is not able to buy onion because 1 kg it takes 100 and or 120. So will he buy onion or will he buy some other necessities that are necessary for his life? So that's where the value of money falls because of less money. I hope this point is very clear. Now let's see deflation. Here the price falls due to availability of more goods. Say for example, there is a company and it modifies new car every year. So, and the public were also very crazy to buy this type of car. Now, other companies were quite jealous and they also wanted to invest their money and modify such cars so that they will also get such benefits. Now, what did they do? They also tried to employ more and more people in their companies, and they started modifying new cars. But when they sold the cars for the first time, they had to lessen the amount or they had to lower the amount or the price of the car, because many companies had started doing this thing. Many companies had started selling this type of car. So this type of car was not anymore new and it was available everywhere. So that's why the price it falls due to availability of more goods. I hope this point is clear. But value of money rises due to more money, because there is more money, the value of money also rises, but the producers on the other hand they face a huge loss because many other companies have started making such things. So who will go and buy in their companies? One or two customers can go and buy because there are many other companies selling such things. And on the other hand, the producers face a huge loss and they try to cut down the level of production. They ask the members to stop making the cars anymore or to stop manufacturing more cars. And on the other hand, even employment opportunities will also shrink, in the sense the people who were newly employed, they are now unemployed. Drawback number two, money is used as a means to acquire economic power. So, yes, this is the only medium with which the people try to show their economic power, their economic dominance in the society. Number three, weakness for money may lead to degrading values like corruption, irregularities, injustice for all types, etc. There are many people in the society who often runs after money and they can do anything to earn money. They even earn through illegal means like corruption, irregularities, injustice, etc. Point number 4. A large scale of tax evasion or black money may hamper the government's economic system. So, as I've already explained to you about tax evasion or black money, we saw how a huge amount of money is left with the individual and it causes the government a huge loss. So, in this way, we can get another disadvantage or drawback of money. Since the name of the chapter is Money and Banking, so we have already learned a lot about money. Now, let's see about the bank. What is a bank? It is a financial institution where the public can trust to deposit and withdraw their money and also borrow money when needed as loans, but has to return with due interest. So I hope everyone got the point clear. It is a financial institution where the public can deposit their money and also withdraw their money whenever they need. And some borrowers can even borrow a huge amount of money as loans and they may return slowly and gradually, but with an extra amount which is called interest. So, the money obtained by the bank as deposit are further given to borrowers as loans and charge an extra amount from borrowers while returning the money. So, as told earlier, the money that is deposited by the public in the bank on the other hand, they don't keep the money in their bank safely, but they use the money for giving loans to the borrowers or who are in need of money. And the people who borrow the money they return back the money by giving an extra amount which is called interest. Nowadays we can see banks everywhere, but it is important to know about its origin. According to Jeffrey Crowther, ancestors of the banks were monetary economists, businessmen, gold merchants, and moneylenders. So, long time back, whenever the people needed financial assistance or financial help, they went directly to the businessmen, gold merchants, or even moneylenders, and they were helped by them. But in return, they had to pay a huge interest. In the Middle Ages, Bank of Venice was the first bank in the whole world, and it was set up in Italy, which gained wide publicity. Commissioners were appointed to look into the matter and were called Monte. The Germans ruled large areas in Italy, so they replaced the word Monte with bank. So I hope you got the point clear. Bank of Venice was the first bank in the whole world. It was set up in Italy. Commissioners were appointed to look into the matter, and the commissioners were named as Monte. Since the Germans ruled a huge part of Italy, so Germans did not call Monte, but they replaced the name with Bank, B-A-N-C-K, Bank, while the Italians called Banco, B-A-N-C-O, the French called Banque, and the Britons called Bank. In India, Bank of Hindustan was the first bank and it was set up in 1770. Again, in Assam, Guwahati Bank was the first bank in the state and it was set up in 1926. It was set up entirely on the local capital mobilization. Kinds, classification, and functions of banks. Number 1, the central bank. It is also called the Reserve Bank of India. Remember that the Reserve Bank of India is the head of all the banks in the country. It gives instructions to all the banks and it was set up in 1935. Remember the year 1935. Riksbank of Sweden was the world's oldest central bank and it was set up in 1656. Now, what are the various functions of RBI or the central bank? Function number 1, it issues currency. It has the monopoly right to issue currency. That means this is the only bank which can make paper notes or the coins. So, no other bank has this right, but only the RBI. The second function is it controls the volume of credit. It controls the quantity of credit, money, and then only accordingly it lends to the commercial banks. So, since this is a bank which produces or makes money, so it has to control the quantity of money that is made, and it accordingly lends the money to all other banks. The next classification is Bankers Bank. When other banks need financial assistance, RBI helps them and examines the member bank's account. So, when we public need financial assistance, we go to the bank and borrow money as loans. So also the banks, when they need financial assistance, they go to RBI and borrow money. But the RBI does not blindly give them money. They check the member bank's accounts, then only they lend the money. The next is it is the financier, advisor, and also agent to the government. So it finances the bank. It also assists the government when they face budgetary deficit, when they earn less revenue by printing new money. So first thing, it finances the bank. The second thing is when the government they earn less revenue from the public, they start facing budgetary deficit. That means they start facing financial problems. And at that moment, RBI is the only one which prints new money and it helps the government. Next, it offers suggestions to the government to make income policy, tax policy, trade policy, etc. So it also gives suggestions to the government so that the ways that it would follow, it can earn more and more money. Like tax evasion would not take place, black money would be stopped, corruption will be stopped. So it gives certain suggestions. The last one is it maintains the accounts of the banks and expenditure of the government. So I have already told you earlier that it maintains the accounts of the banks and also the expenditure of the government. It sees where the government gives the money or uses the money for any purpose or where not. It keeps the track of all these things. Custodian of the foreign exchange reserves. Foreign exchange may take place through export earnings, foreign investment. So the RBI not only keeps a track about the accounts of the banks or the expenditure of the government, but it also keeps in mind about the foreign exchanges that are taken place through exports or foreign investment. The central bank also fixes the official rate of foreign exchange with other countries. So there is a fixed rate, and the fixed rate of foreign exchange is done by the central bank. In free enterprise economy, foreign exchange is determined by the market forces of demand for and supply of foreign currency. There are some free enterprise economy and there the exchange rate is determined by the market force of demand. If the demand is good, the rate of exchange would be high, and it also depends on the supply of the foreign currency. Clearinghouse of member banks. Central bank maintains the accounts of all the member banks. All the transactions of lending and borrowing are cleared at the central banking level. So, as told earlier, it is the banker's bank. It is the head of all the banks. So, all the transaction of lending and borrowing are all cleared by the central bank, or we can also say the Reserve Bank of India. Promotional role to play. It promotes the socio-economic development as funds are given to priority sectors or agriculture. There are some sectors in the society which needs utmost importance. So the central bank gives importance and plays an important role for their development by giving them funds so that with the help of the funds or money given they can improve their condition. Like for example agriculture, it is a most important sector which needs utmost development. 40% of total banking deposits are fixed for priority sectors. So 40% of the total bank deposits are fixed only for the sectors which are very weak and needs development. Miscellaneous functions. That means apart from all these functions mentioned here, there are also many other things that are done by the central bank or the Reserve Bank of India. Like it reviews the economic situation of the country, it supplies the loans to the cooperatives and other banks, it also operates a welfare funds for the educational and social purposes. So we have read a lot about the central bank. Now let's go to the commercial bank. These banks provide services to the public directly or indirectly by conducting activities related to savings, credit, trade, etc., under the direction of the central bank. So, first comes the central bank, next would be the commercial bank. And these banks are the banks which provides direct as well as indirect help to the public by conducting various activities like savings, credit, trade, etc. But it only does under the direction of the central banks. Now let's see the functions. Number one, mobilizes the savings. Savings again has three types. Number one, current saving. This type of saving is deposited or withdrawn by the depositor at any time. Number two, fixed saving. Since the term is fixed, so it cannot be withdrawn directly. The depositor has to give prior intimation to the bank before it withdraws. Number three, savings deposit. Half can be withdrawn, but the other half can be withdrawn only with the bank's permission. According to Census 2001, only 36% Indians had bank accounts. By 2011, 59% had accounts, and in 2014, by August, it increased to 210.5 million Indians had bank accounts. Number two, it offers loans. Short-term loans are offered to improve the economic status of the people, and the people gain confidence in the bank for their rules and regulation. So, short-term loans are given so that the people do not lose their faith, do not lose their hope, and they gain their confidence that the bank would not misuse or would not do any illegal action. So the people have confidence that the bank would surely follow its rules and regulations, and they will trust the bank more and more. Function number three, it creates credit money. It is able to convert a little amount into a huge amount. Or we can also say the primary or the passive deposit is changed into derivative or active deposit. So how is commercial bank able to create or to convert the small amount into a huge amount? Now let's take for example, a person deposits rupees 1000 in commercial banks, but the commercial bank is able to convert the rupees 1000 into rupees 5000. Now let's see how. Once a bank receives the deposit of rupees 1000 from the first person, it takes a certain amount, say for example 20%, so it would be rupees 200, and the rest 80% is given as loan to the second person. Now, what will the second person do with rupees 800? The second person again does not use the money at the moment and deposits it in the bank. The bank again gives 20% and the rest 80% is given as loan. Now this method will help you learn or understand the point clearly. There is round, the deposits that are kept by the individuals, legal reserve, that is the amount that is kept by the bank, say for example 20%, and the rest is given as loan. So let us assume that the first person deposits rupees 1000. The legal reserve or the 20% of 1000 is 200. It is kept by the bank and the rest is given as loan, rupees 800. So let us assume that another person or the second person takes the loan and he does not use the money, and again he keeps the amount in the bank. So the legal reserve is again kept. So 20% of 800 will be 160 and the rest is given as loan. Again, the third person takes the loan, he does not use the money and he keeps it in the bank, that is rupees 640. Again, the bank keeps 20%, that is rupees 128, and the rest is given as load. So in this way, the bank keeps on giving the money up to the time it reaches rupees 0, and in this way it collects rupees 5,000. Now how can it collect rupees 5,000? Below you can see the money multiplier. Money multiplier is the amount of money that the banks are able to create in the form of deposits with each and every unit of money it keeps as reserve. So these are the money multiplier. 1, let us take this calculation, 1 divided by legal reserve. And how much was legal reserve? It was 20%. So we can also divide 1 by 0.20, and then point can be removed by dividing it into 100 divided by 20. The answer will be 5. So rupees 1000 is converted 5 times. That is, it turns into rupees 5,000. So this is how rupees 1000 is converted 5 times and it's turned into rupees 5,000. The fourth function of the commercial bank is miscellaneous functions. All the valuable ornaments, important documents are kept in the lockers of the bank for safety. Some banks also functions as trustee of the depositor's property. So not only giving and taking the money, but it also deals with valuable ornaments by keeping it in its locker. And people or the public keep the ornaments with the banks for safety purposes. So some banks also function as trustee of the depositor's property. So the rest will be continued in the next video. If you think that you are really helped by my notes or my hard work is really valued, do subscribe, comment, share and subscribe my channel for more notes.